Hey there, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage, and welcome to another edition of Java with Jared. Hope you guys are doing fantastic. Well, happy Friday. Happy last day of spring. Yep, today is the last day of spring. Tomorrow will be the first day of summer. So not only do I hope you have a wonderful weekend, hope you have a great start to the summer. I think it's going to be a good one in terms of interest rates and for overall housing, so that's going to be great. Well, interest rates finished the week basically unchanged from where they ended last week. Not a ton of economic data, but the main focus was really what was going to happen with the Federal Reserve meeting. The Federal Reserve met on Tuesday and Wednesday, released the statement on Wednesday, and then Chairperson Yellen spoke before Congress. So the market was really anticipating what would be happening there. First to the economic data, we did see some housing numbers come in. Housing starts came in lower, down about 6.5%, and building permits were down about 6.4%. Now, lower housing data, could sometimes be a concern, but this was for March. And April, we did see a real big increase on both those numbers. So the numbers overall, well, less than what they were the previous month and less than expectations, were still pretty good. So that was not a big overall concern. Tuesday, we saw the Consumer Price Index come out. The Consumer Price Index measures inflation happening at the consumer level, and that was a bit of a surprise. Expectations were for an increase of about 0.2%. It actually showed an increase of 0.4% on the regular number and 3% or 0.3% on the core number, which strips out the volatile food and energy. That was more than expected, and actually, if you look at what's been happening over the period of this year, there's been some concern that maybe there's a little bit too much inflation there. We're at the Fed's tolerance level. The Fed is hoping to have inflation running at about 2 to 2.5%, and with the year-over-year numbers, we're running pretty close to a little bit over 2%, so that we may be at the edge of the tolerance, and that caused interest rates to get a little bit worse on Tuesday in anticipation of what the Federal Reserve would say. Well, the Federal Reserve came out on Wednesday with the policy statement. Really no big change there. Tapering will continue. $10,000 less, or $10 billion less of mortgage-backed securities and bonds will be purchased. So now we're down to about $35 billion every single month from the high of 85. So that was really no surprise. And then during the testimony, Yellen said that the Federal Reserve is going to continue to be in a situation where they're going to have an extreme monetary stance or extreme low interest rates. So interest rates will remain to be very, very low, and that there would be some tolerance for some inflation little blips. So the market liked that, and interest rates rallied. Also, the stock market rallied. So we saw a good day, and interest rates made up the ground that they lost on Tuesday. And then for the remainder of the week, they've been relatively stable, no big change. The stock market has continued to set new record highs, and as long as that happens, that's going to keep interest rates from getting dramatically better. Usually the stock market and mortgage-backed security market inversely correlates. So when the stock market does well, mortgage-backed securities and interest rates don't, and vice versa. So rates didn't suffer, but as long as the stock market continues to set highs, we're going to see some pressure on interest rates, or at least keep interest rates from getting too much higher. If the stock market corrects, that's when we'll see interest rates even get better. On the news for next week, we got a lot of economic data with Case-Shiller, housing starts, or existing home sales and new home sales. And there's also going to be some bit of market watch on what is happening in Iraq and some geopolitical stance. So that's what's going on with interest rates. Hope you have a wonderful weekend. Again, happy summer tomorrow. We'll talk to you later. If you ever have any questions, give us a call. Bye-bye.